Okay, we are going to get started. Good afternoon, everyone. Welcome. My name is Erica Morin. I'm the Manager of Training and Member Services at MSIC. It's great to continue MSIC's monthly webinar series, and we are glad to have you with us. Again, welcome. Thanks for being here. So just to give you a little background, MSIC spent the first several months of 2022 preparing for the MSIC Member Summit and 60th anniversary celebration that took place at the end of June at the famous Mount Washington Hotel in New Hampshire, in Bretton Woods, New Hampshire. So that event marked our first in-person event in over 2 years as a result of the pandemic. So it was a really big deal for our cooperative. A really important gathering, not only to discuss the issues and the opportunities ahead for our credit union movement, but it was also a way for us to reconnect with our peers in the same room. And for many of us, it was the first time in a long time to be together without a screen or a phone as the means to communicate. It was a tremendously successful event, and we received, a great deal of positive feedback, and we were happy to hear that it was enjoyed by everyone who attended. So while there was socializing and breaking bread together and networking opportunities enjoyed by all, MSIC also had a very hearty agenda. We had first-rate speakers and industry experts to address large, small, and medium-sized credit unions from across the Commonwealth on topics relevant to our industry. But what we wanted to do was to make sure that the entire cooperative could benefit from all of the worthwhile sessions that took place. So now on a monthly basis for the remainder of the year, MSIC is going to be sharing the recorded summit sessions with our members for those who are unable to attend the summit, and then also for our credit union CEOs who had approached us to say that they wanted to share the content with their teams. And so here we are. So today we're kicking off our webinar session series with a presentation from MSIC Partners. For those of you who may not be familiar, MSIC Partners is a multi-credit union-owned mortgage QSO offering a flexible approach to credit unions that want to become better mortgage lenders. During the recorded session from the summit, you're going to hear the perspectives of key team members on mortgage lending. There's going to be a CEO, a senior lender, a senior vice president of mortgage services, and the director of credit union services. Following that video presentation today, we're going to have a live Q&A with the panel of industry leaders, which brings me to my introductions. So with us today, we have Jeff Lipes. He is the Senior Vice President of Mortgage Services at MSIC Partners. We have Mike Murphy. He's the President and CEO of Holyoke Credit Union. And we also have Laura Ybarra, who's President and CEO of Allcom Credit Union, and they are out of Worcester. Jeff, Mike, and Laura are going to be ready to answer your questions and share any further info or insights that they want you to hear. And so that's the setup for today. And with that, we are going to begin the presentation. Tony, there's no sound.
Member credit unions. We provide mortgage fulfillment services to many New England credit unions, some of whom you'll hear from this morning. First off, we couldn't ask for a better setup from Paul, as well as yesterday from both Mike Hansen and the credit union leadership panel, talking about the value of collaboration and partnering and sharing of information. Together we can just do so much better as opposed to going it on our own all the time. We're going to, our title is How to Build a World-Class Mortgage Operation. And rather than have one presenter try to give you examples, we thought we would dive deep into a variety of perspectives from a CEO, from senior lenders, and others to share their thoughts and their experiences and what it takes to have a world-class mortgage operation at your credit union. And there's many ways to do it. So I have the pleasure of first introducing Mike Murphy. Mike's the president and CEO of Holyoke Credit Union. Holyoke is approximately 250 million and is located, or its main office is in Holyoke, and we have an additional branch, I believe, Feeding Hills, and I had to look it up. It's Agawam for for those of us who live east of 495. So we're also happy to have Jeff Smith. He's the Vice President and Chief Lending Officer for Freedom Credit Union. And Freedom is headquartered in Springfield, Mass., $650 million in assets, and I saw 9 branches throughout Western Massachusetts. Someone, I think yesterday, referred to mortgage bankers eating our lunch for many years, and Jeff Leitz has enjoyed that lunch. Jeff has worked, started off in a credit union, but worked for several banks, mortgage companies, throughout the country. Jeff joined us in October of 2019 and has helped really build a strong organization here at Partners. So we welcome Jeff. And then Chris Brennan is the Director of Credit Union Services at MSAC Partners. Chris brings a unique perspective in a role that you really would not see at many credit unions. So he's going to help us take a little deep dive into some operational matters, kind of what his workday is like and his objectives, just to kind of see what it takes from a different level, to build a world-class operation. Each panelist has really built their own slides, and with that, we're going to lead off with Mike Murphy. So,
thank you, Jack. Although it says on here that I'm the President and CEO of Hoya Credit Union, I also like to refer to myself as somewhat of a mortgage geek. And I came to the CUSO concept because over time, having basically run a mortgage company within the confines of credit union, I ran into a lot of internal constraints. There was a time where I had a servicing portfolio for the federal agencies that was 3 times the asset size of the credit union. So I know the inherent problems that come with being successful in mortgage lending. So, what I'd like to stress is that mortgages are obviously not a brand new product. They've been around a long time, but it's key to the success of any type of credit union. If you want to be your members' only financial institution, you need to be very, very good in mortgage lending. So you have to make the commitment that that is something that you do with a commitment to excellence every single day. It requires tremendous management talent because it is a very, very unique business. To do it on a high level requires a tremendous amount of talent. Although most credit unions do that on a regular basis, it's a question of how well they do it over time, particularly, as Paul said, as we look to the future. With the CUSO and a focus on strictly mortgage lending, we can look at some key performance indicators that have come from the mortgage banking industry: velocity, borrower share, pull-through, productivity, cost to close. These are all key performance indicators that are very, very difficult to manage within the confines of your credit union. There's simply too many things going on to focus on these key metrics. If you try to measure them, you'll find that they're polluted by all kinds of other things that are going on in the credit union where your staff wears many, many hats. The CUSO can isolate those and focus on those completely. And of course, we do have to innovate. We have to have the latest in technology. It's available to us, but if you try to really employ that technology on the asset base of your credit union, you'll find that it's not completely scalable. So, having a focus where there's a commitment exclusively on mortgage lending can be the foundation for the credit union into the future. Making home finance, and what comes with that is refinance opportunities when they develop, making that a priority. Also, you need to staff and operate in a significantly improved manner, and that is related to the bottom bullet point, which is the ability to turn what in a typical credit union, or a depository for that matter, a bank, a fixed cost into a variable cost. All of these things combined together will allow us to be better positioned to confront our real competition. I cringe when I talk to other credit unions and they point to the credit union in the next town as their competition for mortgage lending, because they're really missing the game. And I also cringe just a little bit less when I talk to the credit union and then point to the local mutual savings bank. That's not the competition. Our competition is the independent mortgage banking company. Rocket Mortgage being the fintech mortgage, independent mortgage banking company, but there are also many others, and they are doing a tremendous job. Credit unions, Jeff will focus on this a little bit more. We've picked up our market share slightly, but you know, I'm not quite sure why that is. It certainly isn't because we've done a much improved job. But the banking industry, our fellow depositories have lost a great deal of market share to the independent mortgage bankers. And I have to think that unless we change the way we make mortgage loans, what has happened to them will probably happen to us. And, you know, a good example of that is that, you know, the big news last week was Chase Bank really laying off most of their staff, almost exiting the mortgage business. So mortgage lending is all about talent. I think the model that MSIC Partners has developed will allow credit unions to focus on the front end. And by the front end, I mean, how do you originate loans? Do you use your branch staff, or do you use commissioned loan originators? But with our CUSO business model, that's left in the hands of the individual credit union. So similar to what Paul said, that's where you have your ability to maintain your own focus. You also take care of the back end. Once the mortgage loan is produced, you can put it on your books. You can sell it to the Federal Home Loan Bank. You can sell it to a private investor. You can sell it to one of the housing agencies. That's all up to you. What the CUSO does is the CUSO handles the production aspect of it, from processing to origination to closing to funding. That allows you also to focus on your product offerings. You now have the ability to offer a much broader product because it's not exclusively on you. And again, the talent to be very competitive in the mortgage industry is probably not available to most credit unions. So, spending a little bit of time on explaining these key performance indicators that will, in time, give us a competitive advantage, which we can handle that competitive advantage in two ways. We can offer a better price, a better rate to our members, which will lead to increased business, or we can capture that for our bottom line and allow us to, in some cases, subsidize some of our traditional products. So velocity, and that's really about how long does it take to close a mortgage loan. And it's directly correlated with the cost to close. Simply the faster you can close a mortgage loan, the more satisfied the applicants will be, and the less cost you'll have. Borrower share. How many mortgage loans have we made in relation to our existing membership? Right now, it might be from 7 to 10%, but you know that leaves 90% of the market available to us. Pull through. Pull through is you measure the ratio of submitted mortgage applications to those that actually close. So again, this allows you to focus on the front end, taking the right type of applications, segmenting your potential applicants before they actually apply, and then the ability to get loans through with all of the additional regulations that have been put in place, whether it's from the Consumer Financial Protection Bureau or the agencies. I think we will all, you know, admit it's difficult to make a mortgage loan these days. And finally, productivity is where it comes down to how many loans are we closing based on how many people do we have working on loans. And if you're doing this without the CUSO, and you're doing that, again, you get into that measurement difficulty of, well, how do I allocate the cost of this person or that person when they do so many different things for us? We can focus on that, and we can isolate that in the CUSO. And at the end of the day, it comes down to cost to close. Right now, I think the Mortgage Bankers Association talks about $8,000 as the real cost to close a loan. So oftentimes, we in this industry will debate that number, but again, it's because many of our costs are baked into the overall operation. They're there, we just don't know it. And finally, innovation, which comes with employing the very best loan origination system out there, which I think our CUSO has with the Encompass system. Through the CUSO mechanism, we're able to put every credit union on the very same system. many of the smaller credit unions will be able to have a premier loan origination system that there's just no way that they could have it themselves. Some of the larger credit unions that actually deploy this system now, it comes with standard model, but many of the bells and whistles require additional programming and additional cost. And those are the latest and greatest features that we need to have to basically compete with someone like Rocket Mortgage. So at the end of the day, the QSO gives us the ability to pay attention to the details and to look for the very small changes, not the dramatic ones, but the very small changes that on a consistent basis will have really impactful change to our overall productivity, which will allow us to compete. At the end of the day, the QSO is going to deliver increased productivity, lower costs, and it's going to allow each credit union to, from there, create their own competitive advantage. Yeah, I think that does it for me.
Great. Thank you very much, Mike. Mike has been very supportive of our operation from the start. We actually started fulfilling his loans. He transferred his Encompass system, which he had built out and already created a paperless operation in his organization. So that gave us a real jump start to our operation. He also shared some great talent to us. So thank you, Mike. I'm happy to introduce Jeff Smith, Vice President and Chief Lending Officer for Freedom Credit Union, and he can talk about his experiences in mortgages as well.
All right, thanks, Jack. Just give you a little bit of brief history on myself. Been at Freedom Credit Union now for about 8 years. Prior to that, I was 30 years in banking, pretty much an array of everything, commercial lending, consumer lending, and mortgage lending. And the last 17 years of that banking piece was done at Florence Bank in Northampton, where I managed the #1 mortgage lender in west of Worcester for several years. So what I'm here today to tell you about is our 2-year history or story with MSIC Partners. It began in February of 2020, where Jeff Lipes gave me a call. I've known Jeff for quite a long time. As a matter of fact, about 30 years ago, my sister used to work in one of his mortgage operations. And he asked me to visit his headquarters and in Agawam, and told me about the QSO that he was forming. And I was kind of excited about to see his headquarters. I went to Agawam. He showed me the offices as well as some of the talent that he had. But at the time, I had a full staff at Freedom Credit Union that we had built up over the years, and I didn't really think that we had a need for it. But let alone about a week later, I had a processor leave to a competitor. A month later, the pandemic hit, so hiring somebody new was almost impossible. By April, our QC person announced that she was going to be leaving in about 6 months. In May of 2020, our underwriters were thinking of retiring within about a year. And then in June, my next processor left, as well as one of our closers, and I immediately called Jeff and said, I think I need your services. I think I need it tomorrow. But we worked quickly. We were up and running with MSIC Partners within about 45 days. So by mid-August of 2020, we were going live and sending them our applications. And you got to understand the times. It couldn't have been more difficult. We had a pandemic. We had most people now working remote. They've never done before. We're joining a new process, a new LOS, and probably one of the highest volume we've seen in 10, 15 years. But looking back, I mean, it was probably the best thing we could have ever done at that time, and it's worked wonders for us. In that year, generally we would book 40 to 70 million and in mortgage loans, and 70 would probably be about the highest that our current staff could potentially produce. We reached over 90 million in 2020 with the help of MSIC Partners. I did a cost benefit analysis with our CFO in June when we started talking to Jeff to make sure this is going to make sense for us. Obviously, the first cost savings for us was losing 6 or 7 staff members. Also, getting rid of the LOS system that we had as well, that we were paying $60,000 a year on. We projected, we knew that the volume was coming, that we could probably do 30% more volume with a better back office. And that happened. I mean, we not only booked 90 million in 2020, but we almost reached 115 million in 2021. And that would have been impossible with the staff that we had prior to joining with MSIC Partners. Our market share in the Pioneer Valley in Western Mass, comparing us to local institutions, we moved up from number 8 to number 4. So we started to become a force in the marketplace. In the cost-benefit analysis, it certainly improves as volume goes down. You know, in a standard or average year, it works great. And even times now when the market is very low, it's even better. We're actually in the process of hiring a new mortgage loan originator in the Connecticut area. We're moving into that market, and we're not afraid to do that. There were times where if we added a new mortgage loan originator, the back office would be saying, well, we need more staff to help you out. We feel confident now with MSIC Partners. We have 4 mortgage loan originators. Next month, we'll have 5, and we could potentially go to 6 or 7 with this type of model. Our focus, you know, coming out of the pandemic is trying to do more with less. Right. The talent at MSIC Partners is excellent. As we talked about yesterday in the SWOT analysis, you know, the labor market very tough right now. There's a lack of talent, and if there is talent out there, it's probably too costly for you. What level of staffing is best for us? It's almost impossible to staff perfectly in the mortgage area. I mean, I've known that for many, many years. You always have issues with overtime, you know, utilizing inexperienced staff when volume gets high, and then being overstaffed in times like this when mortgage volume is low. In talking with our mortgage loan originators, they love the processors at MSIC Partners. They like the fact that they got dedicated processors working with them to get the loan through the process and get it approved. Our manager loves the underwriters. He's very consistent. You get a lot of experience, and the recommendations they make for denial or approval are excellent. And one of the things that first came out of this whole process was the attorneys loved the closing area. They feel it's very efficient, and everything goes really well with not only the funding as well as the documentation back and forth. So I think we've actually been getting more business from the attorneys over the past years now that they're used to our new process. Paperless, that was something that we had dreamed about for years and been striving for. And when we went with MSIC in August of 2020, we ripped off the Band-Aid and we went overnight with paperless. And we couldn't come at a better time because at that point, over 95% of our applications were either coming through the internet or by phone. No one was coming into the branches, obviously. So working paperless was perfect. People were obviously working remote, so this allowed them to stay remote. And we were working with the Encompass system. And you know, I feel now that I'm so used to that system, I'd rather look at a file in Encompass rather than old school looking through messing through an old credit file. As I mentioned, the Encompass system, it's probably one of the best in the industry, if not the best. And we went from MortgageBot that I mentioned, but I think going from any system to Encompass is most likely an improvement. You know, no longer do we have to call the 800 number when we have an issue, wait for weeks for a change, or just be told that that change can't be made. You're going to hear from Chris later on in the presentation. There's nothing he can't do, and he's available for us all the time. It's such a great safety blanket to have. You know, a good example of this is, you know, using MortgageBot for home equities. A few weeks ago, on a Friday afternoon, we find out, oh, the system's down, no closings this afternoon. and all you get is an email. There's no one to contact there. You're helpless. Compliance, because of our high loan volume in 20 and 21, we ended up having to go to the added data fields for HOMDA reporting. And Chris and the IT people at MSIC Partners helped us with that. It was a big project, and happy to say that the Division of Banks came in to see us a few months ago, and they gave us a satisfactory rating for the last several years of HOMDA reporting. So I was very happy to hear that. Quality control, that's always a big thing to be concerned about as well. MSIC Partners does QC prior to closing. We get those reports. We do a QC on all the files after closing, and I get those reports, and I can tell you that not only they improve, but I rarely see any errors in these reports. It's usually pretty clean. So we've been happy with that. And then finally, our next step, we talked about home equities. I reached out to Jeff Lipes in March, and I asked him, what do you think? Could you ever do home equities too? Because I'm having the same issues there. The overtime, the turnaround time, not being completely paperless yet, the poor LOS system, hiring the inexperienced staff. At Freedom Credit Union, we've seen increased in home equity volume about 20% per year since 2017. We have more home equities in process right now than we do mortgages, and it's not stopping. And interesting enough, about a month after I talked to Jeff about this, two of my mortgage loan originators came up to me and said, Jeff, is there any way MSIC Partners can do home equities for us because they do mortgages so well? I mean, that was a great testament because, it was a tough change in the beginning, and now they love it. So we're hoping to go live with home equities with MSIC Partners in late August or early September, and we're absolutely looking forward to that. It's a great relationship. We love working with their staff. It feels like their staff is our staff. And, as I mentioned, I came out of Florence Bank with a really good mortgage operation. I really feel like at this point, I only brought that up is I think Freedom could get to that point with their help, no doubt.
Jack, could I make a point? It just occurred to me, I know most of the people in the audience don't know Western Mass, but I think Jeff and Glenn would agree that on a credit union to credit union, we're probably looked at as competitors. We share the same market area. We have branches in a similar community. At the same time, in 2021, Freedom Credit Union increased their mortgage loan originations. So did we. So, that emphasizes the point that our increase in business came from our other competitors. Didn't come from our credit union competitors because, like Jeff said, the people who processed, underwrote, closed, and funded his loans are the same people who processed, underwrote, and closed my loans.
Great. Thanks, Jeff Smith. We appreciate it. We appreciate the trust in us and our partnership. So, next up, we have Jeff Lipes, who has some remarks to talk about mortgage lending.
Thank you. Good morning. Before I get started, I may offend some of you today, which I apologize. It's all meant in making you better rather than to take it as a negative. Jack gave a little bit about my background, but I do think that you need to understand when I give you this message and when I talk to you today, it's from a knowledge-based situation. I've been doing this I got into the mortgage banking business when Jimmy Carter was president. Prime rate was 18.5%. I think it went to 21%. We were doing mortgages at 18%. I said, why the hell did I choose this profession? So anyway, I got in it. I've been active. I started at a credit union. I then ended up going to banks. I ended up going to a Boston bank that got acquired by Citizens Bank. They relocated me to run that, moved to Rhode Island to run that organization at Citizens. Then I got recruited out to the Midwest to run one of the top 50 mortgage companies in the country, a national group that we ended up selling to a Fortune 500 group. I came back, started my own mortgage company, sold that to a bank. And then when that got acquired, I retired, and then I got a call to say, would you like to do this opportunity? And I took it. So just to give you a little background, I do know a little bit about mortgage. So let's start there and go with, if I'm looking in your seat as a CEO, what do I think is important? And I look at that and I'm like, what I try to say is how do you increase revenue to fund your growth? How do you grow? How do you get more income in? I think that's a very important thing. The second thing is how do you strengthen your member relationship? Two important things that I would see through your eyes that I think are important. So how do you do that? I know you have a lot of other important items, but I think those are two pretty important ones. And my answer to you is to look at increasing your mortgage volume. So let's talk about that. Why will that satisfy those two needs? So we look at a slide here from Rocket Mortgage. I can't see behind me, so I'm assuming it's up. I just wanted to give you an example of, here's a company that focused 100% of their efforts on mortgage lending. And I circled in red on this slide that for the Q4 of last year, they averaged a revenue of $10 million a day. Every day the sun came up, they had $10 million of income coming in. I think that's pretty good revenue. Now, I don't think that, I'm not here trying to say that's the revenue that you will get. I'm just trying to show you that somebody who focuses on mortgage lending can make a lot of money, and it's good for revenue growth. So now let's look at the next slide from the Credit Union Times. It talks about stickiness of products. What are great stickiness of products? Well, I also highlighted in there that it says that members with mortgages at credit unions typically have a greater number of relationships with that credit union. So it proves that if you focus on your mortgage business, not only can it be profitable and bring in a lot of revenue, but it also helps your member relationship and the stickiness. So not thinking about saying, yeah, we just don't do a lot or we don't concentrate on it. I would tell you it may be something else that you want to look at. So now let's look at your industry. We heard Mike talk about credit union share. I have some stats here that show the credit union is averaging, the credit union industry nationwide is averaging about 7% of all the mortgages done in the country. So 93% of the people are going somewhere else. Now, where are they going? We heard about independent mortgage bankers. Like 56% are going to independent mortgage bankers. 35% are going to the banks. And only 7% are going to the credit union. And I look at that and I say, I'm coming from a mortgage banking side. There's something wrong on the credit union side. Why? You have so many more advantages than the other two main competitors. First of all, the independent mortgage bankers have no relationships already set up with these borrowers. You have a relationship. We heard Paul talk about trust. You have trust already built in there. You have tax benefits. You have so many advantages that are ahead of the independent mortgage bankers and some of the bankers. And yet 93% of your client of the industry is going somewhere else. Over the last couple of days, I've heard some people say, the mortgage industry has collapsed. And I just smiled and said, well, wait till my presentation. The mortgage industry has not collapsed. Your model has collapsed. Your model is waiting for people to come in and refinance them as an industry. That's why you're at 7%. If you were at the purchase market right now has only dropped from last year to this year, only 13%. Okay? And I don't know about you, but I know a number of people in my realm that have, as I say, I want to buy, but there's not enough inventory out there. I can't wait for, there to be more inventory. So there's a pent up demand. It's not an issue of the interest rate, whether it's 5% or 6% or whatever it may be. There is a pent-up demand for people who want purchase money. But the credit union model right now tends to wait for the member to come in and focuses more on the refinance. And I'm going to go through and talk about some things that if you want to build a world-class mortgage operation, some of the things you have to break your model and try to do. Let's start with the next slide, just showing where you are in home equity business. In home equity business, you're more than double. You're at 15% of the marketplace is done by credit unions. So that's at least two times what you do on the mortgage side. So my challenge to everybody would be, how do you at least get to the same level on your mortgages as you do on your home equity? How do you get to be at 15% nationwide in the credit union business rather than just at 7%? You're doing it with home equities. Why can't you do it with first mortgages? And if you look out there, this is my view. My view is that when somebody wants to get a purchase mortgage, when time is of the essence, when moving vans are involved, they tend to go with somebody that specializes in mortgages because they don't want to have all those issues that, oh, sorry, we couldn't get to that, we couldn't get to that. But when they already own the home and it's a home equity loan and they don't have to worry about staying in a hotel if you don't meet the closing date, then they deal and they're happy to deal with you. And you tell them it's going to be another 3 weeks or 4 weeks, that's fine. And you go from there. That's fine in your model. It's not fine in the model if you want to be competitive. So let's talk, if you're missing some of these ingredients, make sure I'm on the right page. The 5 key ingredients. Number 1 is hire experienced talent who focus 100% of their time on mortgage business. If you want world class, if you want to get where you saw that income coming in and where you saw the stickiness of product, that's number 1, number 1 to do that. It's been very difficult over the last 2 years, especially in your industry, to hire experienced talent when you lose somebody. Has it been difficult for us in the CUSO? No. Why? It's because we grew up in the mortgage business. We have a network in the mortgage business. We hire people that want to work with us and they come and they have years of experience. Your model tends to be, well, Joe or Sue is a good teller. I think they're going to be good at growing. Let's move them up to make them a processor and hopefully we'll get them trained in time. And you know what? They'll do a great job and that person will do a great job, but you're going to still stay at 7% market share. You're not going to get up to the market share that you really should be at. Second, use technology to automate your process. We hear everybody talking about the fintechs. Well, you know what? We can do that for you. Not only is it a requirement, but we can do that within the CUSO. We have, and Chris is here, he writes what they call them bots. He writes programs to make it so that it takes the human being out of it. Oh, I forgot to order this, or I forgot to order that. Well, when you have it set up as a bot, it automatically does that. It takes the human side out and improves the process. Offer competitive products and control your pricing to control your game. Obviously, you want to have the standard, the vanilla products. We'll talk a little bit more about them, but now the ARM products tend to be more in the marketplace now that interest rates have risen. Number 4, this is the one that I think that you can have some major improvement is consistently tell your members in the real estate community, you do mortgages and you specialize in mortgages. I think, when I first started in this business, I said, well, I'm calling on all these real estate agents and they're not giving me any deals. And my boss said to me, well, did you ask for the business? I said, yeah. They said, well, tell me how. I said, well, our rate's this, our rate's that. I said, he said, no, did you say, can I get your next loan? I said, no. He goes, well, you got to ask for the business. And I think that's what you have to do in the credit union side too, is you have to let your members know that you do the business and you do it well. And then you will increase that market share. Lastly, never take your eye off compliance. Obviously, in 2015 with FID coming in, they've increased all the wonderful penalties that you have to pay if you're not following compliance. Makes it very complicated for you if you don't specialize in this, and you could get slapped on the wrist, and sometimes you could have your wrist taken off. If you're using somebody that is 100% focused on mortgages, knows it, I'll challenge anyone in this room with any department to go one-on-one with our team on compliance. We know what we're doing. All right. If you're missing some of these ingredients, what should you do? Well, in my opinion, there's a concept out there called KPO, which is knowledge process outsourcing. And that's what we heard Paul talk about earlier with what QSOs do, that you're outsourcing what you don't do well or where you want to have an improvement. And basically it involves contracting out work to individuals that typically have expertise in a specialized area. If you're not managing your organization with a KPO mentality and you think you can do it great within your own organization, you're gonna stay at 7% market share. You have to find the experts, and you have to get out there, and you have to leverage those. So now let's talk about the 5 key ingredients as an example of the first one. Here, the first one I talked about is talent. I'm amazed that more people in Massachusetts credit unions are not using our QSO. We heard Paul talk about having Jason Tatum. We've got Jason Tatum. We've got Steph Curry, we've got Tom Brady, we've got them all on our team, and we don't have everybody using us. I don't understand that, but we have the talent that you guys need to raise your market share and double your market share. And there's an example. There's 200 years of experience just in my team alone, and that's on mortgage banking. If you wanted us to talk about banking, it would be more than that, but I'm talking mortgage banking. We know what we're doing, and we know how to do it well. Number 2, example of technology. Some of the things that we bring to the table for you. We bring a product and pricing engine if that's what you want. So your member, when they apply, they can see what they qualify for, and if you wanted to have any risk-based pricing built in, it automatically calculates that risk-based pricing and shows the new rate. So it doesn't have to be calculated or the member doesn't have to be told later, oh, because your credit score is this or your loan to value is that, we had to do something different. We have that automated, already built into the system seamlessly. Tax returns, every now and then you may get somebody that's self-employed, or you may have a lot of people in your market that are self-employed. Well, we have a software system that has optical character recognition. We take the tax returns, we run them through, and in minutes, it spits out the income that Fannie, Freddie, Federal Home Loan Bank will give reps and warrants on honoring that income. How many times in your office do you see somebody sees that the next file has 4-inch sticks of tax returns, and they say, oh, it's time for me to go to lunch, and they're hoping the next person takes that loan while they're at lunch because it's very complicated. We don't have that issue. All they do is upload it into the software. They come back from lunch, the income is already right there, reps and warrants with all the agencies. So how many hours does that save you in processing time? Fraud reports. We're doing all the fraud reports. We're making sure that that borrower is who they say they are. There's nothing wrong. We're checking the exclusive party list. We're doing everything to make sure that you have a high quality loan. All that's built into our system. Compliance checks. Every step we go through, we have compliance checks that check to make sure that there is nothing that's going to go wrong from a regulatory standpoint where you're going to get your hands slapped. So you have to have that technology built into your system to be world class. Let's go to number 3, product and pricing. I talked about, you want to have your vanilla product, your 30-year fixed and jumbo and conforming. Now you want to make sure you have a 5-1, a 7-1, and a 10-1 arm. That tends to be where the market is. A lot of people that don't understand ARMs are like, oh my God, are we going to go through the credit crisis that we did in 2008 because now ARMs are back? And the answer is no. The 2008 credit crisis was caused because of products that had negative amortization. They were caused because they had no income, no asset verification, things along that nature. It's not the ARM product is a very good product. I feel like the hair color for men, because not only do I have an ARM product, it's a great way in an interest rate market that has increased to keep competitive and to help people buy more homes. Example number 4. 4 is really marketing, where I said, are you telling your member that you specialize in mortgages? And in my opinion, there's sort of 2 ways. There's the way of if you have traffic in your branches. I'll just share an example of what I saw somebody do that I thought was genius. They took and bought goldfish bowls and they filled them with quarters. And they put that on every teller window. And they put a sign up that says, if my teller, I'm saying it wrong, if our teller doesn't tell you we're in the mortgage business, feel free to reach your hand in and grab as many quarters as you want. Now they told the teller, after this 2-month campaign, you get to keep every quarter that's in that jar. Guess what? Those tellers wanted those quarters. And guess what? Every person who walked into that branch was told about mortgages. The message got across. Are you doing something like that? So that's if you have in traffic. If you don't have in traffic, well, the cost savings that you would have in reference to using the QSO or using any QSO, move talent to social media. Make sure you have somebody that's doing LinkedIn, that's doing Facebook, that's doing Snapchat, that's doing all these things. I have no idea what I'm talking about. That my kids know about, that the next generation that you want. That's what you need to spend your money on, not spending your money on, putting an ad in the paper or something along that nature. So that's how you become world-class, is you do it on a digital front and you do it on your foot traffic front. Lastly, example of ingredient 5, which is compliance. TRID, we called it when it came out 2015, the initials stood for the reason I drink. And that is not what it means, but it's called know before you owe. And you have to do all of these regulatory things with which to make sure your borrower, your member is in compliance. And if you don't, you're going to get penalized. And that penalty can be severe. So you want to make sure that your eye is on compliance. We know that business. We live that business. We do it every day, and that's what we focus on. We have no other area that we have to worry about. We do 10% pre-closing to meet agency guidelines on anything that you're going to sell. So now we've met that criteria for you. We do 10% post-closing audits on every one of your loans that you're going to sell. And we give you those reports. And I got to tell you, what I have experienced is most credit unions call up and say, well, our auditor told us that we're doing this wrong. And what I go back to them and I say is, your auditor is probably 24 years old, right out of school, has read the textbooks, but doesn't know what the hell they're talking about in reference to how the business works. Let me tell you what you tell your auditor. And then we'll say, okay, auditor, show me in the regulation where it says it has to be done that way. And I push back and we push back. And you know what? Every material finding has been removed. So we know how to do it, we know what we're doing, and we do it in a way that works. Make sure your policies and procedures match. That's the biggest thing. When the Department of Banking or whoever your auditor comes in, that's what they really want. So if you say you're going to do something, then you just got to do it. And just make sure that they match. So that your compliance has to be in line there. Get ready for cures. One of the benefits that we provide, if we screw up and we didn't disclose something in time, we eat the cure. So you don't have to worry about that if it's our fault. If it's your fault, you know, with some other area of compliance, then that's it. But every time we send you an invoice, that invoice shows what we charge you, and it shows the cures that we had to pay on your behalf because we might have made a mistake. Example of a mistake would be a change of circumstances. Appraisal came in lower than it was supposed to, and we didn't tell the person within the 3 days in time. And there could be various reasons for that, and it caused a recording fee that was $75 difference. So we paid that $75. But just know, we take care of the cures. HMDA, we have someone 100% knowledgeable, expert on HMDA. I don't know how many of you love HMDA. I've never loved HMDA, and I hired someone who actually told me she loves HMDA. I think there's like 2 in the United States, and I have one of them. And she's got it all, through Chris, we have it all programmed to make sure that HMDA numbers are put in the right spot, that it's automated, that exams will go, you know, we give you the data, and you're still responsible for the reporting and then getting it to the regulators. But we take care of making sure your data is pretty secure. So let's go to the next one, your call to action. You know, if your credit union is active in mortgage today, you know, go back and meet with your chief lending officer and review those 5 key ingredients that I talked about. Determine the ingredients that you need, and if you need any help, you know, look for a QSO, look for us. You have one here already that you can reach out to help you to get there. If it's on commercial loans, we can't help you. If it's on residential loans or home equities, we can help you. So you have a QSO right here that can do it. And if you're not active in mortgages today, but you'd like to become active, then invite us to visit your office and discuss, you know, what steps you know could get you there. So as I said at the beginning, you may love me, you might hate me more after this, but I was trying to be brutally honest. So thank you.
Thank you, Jeff, for those insights. Those were great. It's my pleasure now to introduce Chris Brennan. He's our Director of Credit Union Services, and Chris is really a lot, in many ways, the man behind the scenes, helping the mortgage loans go from application stages to closing. We hold 2 to 3 Zoom sessions because we're still hybrid a week, and I'll tell you either once, twice, 3 times during each Zoom session, a processor, a closer, an underwriter is giving a big shout out, thank you to Chris for making their life easier. So with that, I'll turn it over to you, Chris.
Thank you, Jeff. Well, it's definitely reciprocal because that's where I'm getting a lot of my facts and information, and that's why I see technology and the process strategy as key components to our innovation and improvements in our business. And I wanted to talk briefly about some examples of what we're doing, just to give you a sense of how we're operating and leveraging that experience on the team through the use of technology, which is our Encompass system. But before I do that, I just want to give you a little bit of a background on myself. I went to Western New England College, graduated with a computer programming engineering degree, and I had a junior and senior internship that turned into a full-time position. I worked there for a few years, and there was a colleague that started talking to me about real estate investing. And this was around 2005, 2007, and I was just intrigued by how much money they were making. And I was watching the show Split This House, and I wanted to learn more about how to do that. And my parents were not so happy because I just got my engineering degree, and now I'm very interested in real estate. But I joined a CTRIA, Connecticut Real Estate Investing Association, and started learning more from people who were doing it in my area. I was living in Connecticut at the time. And then shortly after, the engineering firm or company I was working with, it was a radio and digital television broadcasting company. They were bought out, and I was let go, but I was one of the happiest people because I was ready to pursue my real estate investing career. And it paid off. I started working with Connecticut Homes and Fortune Builders. They were doing, I think in their high, they did about 100 renovations in 1 year. And then they were on the shelf of this house. and I'm in one of the episodes. And it was completely staged. I was supposed to be a buyer, but besides the fact that it was a fun experience, and it got me into another area. And what in turn I did for them was develop their back system. In their education system, I was working on their systems and setting up, customer service databases and that kind of thing, in return for the knowledge and experience of working with someone who was already doing what I wanted to do. I ended up buying 2 rental properties and renovating it, and I just recently sold one, and I still have the other 3 family house. And then they moved to California, and so I decided maybe I should get back into technology, and I joined United Bank. At the time it was Rockville Bank, and then it was recruited into the mortgage area to become the system administrator for Encompass. At the time, I didn't really understand the significance of Encompass, but it's a highly sought after LOS system, a loan origination system. It holds about 40% market share, which is huge in our industry. And I became a certified Encompass administrator. And at the end of my time with the bank, we were a $7.5 billion bank. And actually, with my last 2 years at the bank, I joined secondary marketing as a senior analyst. So I worked on our FHLB pledging, I did MSR evaluations, our product and pricing, and as well as some hedging and selling of loans. So that mortgage experience, which was about 8 years with my 2 years of secondary marketing experience, was a great combination with my technical background to now join the CUTA, where we can develop all these strategies that we've done at the bank for each credit union now that we're working with. Was there one more slide before that? Yep. So this is not meant to be read. I understand it's ineligible, but I just want to show a high-level view of the administration side of Encompass. LOS systems are not a one-size-fits-all, and this is apparent in Encompass, and as it should be, because they give you all the tools to customize it for your institution. The left 2 columns are just for building out your environment. The next 2 columns are solely for enhancements and productivity. And then the last column is for maintenance. But it's just a testament to Encompass understands the power of technology and what you want to do in your business. And it's really, as an engineer, if you want something to exist and it doesn't exist, you can make it exist. And Encompass allows you to do that. So the biggest thing, though, with Encompass is having the ability to create a digital process. And so these next few items, I'm just going to talk briefly about and give you an example of each of these, starting with the online applications. Really, technology is sought after now by all the consumers, and it's in many ways expected. And so what Encompass has done is it gives you a front-end online application that the customers see. And I'll get into a little more detail in the next slide. But it also includes all the services that you're running, and there's many services in a centralized location. We have the ability to automate, which is probably the biggest area where we can improve our process strategies. And work queues, we have information at our fingertips. Everything is digital, every field is reportable, so we can pull in that information and use it accordingly. And then obviously with reporting, we can do that at a management level to see where any inefficiencies are or improvements need to be made. So the online application is given to you. It's a Consumer Connect. It's called Consumer Connect. It's an online landing page. You can have an application. Each are customized. We can configure those to your credit union with your logo, your theme, your brand. And then those loans go directly into Encompass and can be assigned to our processor. So we are immediately getting that contact, whether it's a pre-qual or a full application. We get incomplete applications, so we have a way to follow up on every contact that we see through the online portal. It's also how we're delivering documents to borrowers and how they're delivering documents back to us, and as well as e-signing. So that's on the front end. Later on, we are looking into the e-closing aspect too, and that's going to be a huge part. And I'm so happy that Encompass is on our side because they're doing all that development, and then we're just going to implement it on when it comes time in our state. So moving on to the vendor services, there are many services that you run during the loan origination process, and it's important to keep it centralized in the loan origination system. And because it's paperless, we don't have a filing cabinet or paper file we're working with. It's an electronic filing cabinet, and this is a picture of that. So when you run one of these services, it's logged in your e-folder, electronic filing cabinet, and it's documenting when you requested it, when you received it, when you reviewed it, and then you can use that data in your workflows. This is also important just because you have a way to see everything that's happening in the loan, and you have a way to document everything that's happening in the loan. Moving on to automation. There's templates to start your loan. So even before we have borrower information, we have a full loan setup. We have our fees, we have our documents, we have our program information. And then what we're doing with the automation or bots, as we call it, we're basically creating a dynamic loan. So if you make changes, our loan will change with it. If you make a loan purpose change, our fees will change, our documents will change. So you're not going through a checklist trying to figure out, okay, if I make this change, what else do I need to do? That program has been built, and we're automatically doing that behind the scenes. So it's like you have an assistant with you all the time whenever you're working in the loan. The checks and balances work great for the HMDA. It's like a check engine light. So as you're working on the loan, if you make a change, we have a flag, a hard stop. You can't progress until you correct that change. And it's just reassuring as you're going through the loan that I'm doing the right thing. This checks out. Let's keep the loan moving forward. And we have those checks for each milestone that the loan progresses through. We can control access throughout the loan process. So loan officers have certain access in the beginning, and then it changes as it goes on to processing and underwriting. The documents are smart documents. We can pull the data from the loan onto the document and also put logic on the document. So these are Word documents with, logical statements. If this scenario applies, put this statement. If this scenario applies, add something else. And that way we don't have to worry about which document we're choosing. It's doing it for us. We choose the one document and it will combine the loan scenario for us accordingly. The next slide here is one more, Jeff, is another feature that Encompass offers. If you don't have it, you can build it. So we can build fields, we can build logic on the fields, we can put any kind of customization that we want to develop through our process strategies and through the experience of the team into those fields. So it's really that there's no limit. So when I was working with the bank and we were in meetings of 30 people trying to figure out what process to go through, they said, "Do you think this is possible?" And my answer was always, yeah, we can do it. Well, I don't know how yet, but I know it's possible in the system, so we'll figure it out. And so that was just my driving force, and we always did. So we always figured out a solution because it was an open source technology. You can write, basic rules, but you can have a whole SDK environment, a software development kit that enhances the whole Encompass platform. So it's really incredible in terms of a programming standpoint, what you can do in the loan origination system. These are the last two slides. I know we're running short on time, so I'm trying to be quick. The work queues here are basically a way to check your priorities. We're using a dashboard with multiple reports on the dashboard, and it's customized in a way that it's showing you the most important information in each little view. So, for instance, our disclosure desk is seeing as soon as the loan becomes an application, it hasn't been submitted to me yet, but my 3 days is ticking, so my eyes are on it. when did you submit it to me for disclosures? These are ready to go out. I'm gonna send them, to the borrower. Hopefully they e-consented. We're always pushing the e-consent because it's a much simpler process for the borrower, and us. And then, any expiration dates. We don't want the loan sitting in a document collection milestone, waiting for borrower documents to come in until we move to processing. We want to reach out to the credit union to be in touch with the borrower to move that process along. So we want the turn times to be efficient, but we're watching it consistently. Moving on to the next, just really the reporting is endless. There's thousands and thousands of fields in Encompass, and they can all be reportable. So it's what are you looking for? And as an experienced team that we have, what do they need to best do their job? Where can we see our inefficiencies and how can we improve on those? And so all these things are possible with the technology in the combination with our experience in the team to develop these strategies and make a world-class mortgage lending system.
If you can give me a call back, I'm not in the office today.
Erasing message. End of new.
Thanks very much, Chris.
Using the
So
message. Goodbye.
that was our formal presentation. You've heard from different levels of leaders in the mortgage industry. You've kind of got also a sense of how deep you can dive within your own organization if you choose to continue to keep it in-house, what things you should be looking at, or a sample of things that a company like MSIC Partners can bring to you. So with that, I'll put it out to any questions or comments from the audience.
So a question for Jeff. Jeff, how would you suggest we get the word out with the CUSO and what the CUSO can do to the credit unions throughout the state of Massachusetts?
I don't know that I'm the best one to answer how you get it out within your own industry. I'm happy to make visits to any organization at any time with which to get the message out. But I don't have the contacts that the association has that can help us get there. So, whatever anyone suggests, obviously the crowd is sparse here today. I wish it was bigger for everybody to hear it and bring it back, but anybody that's used us or that supports it, I just think telling your fellow CEOs, telling them that the message for this whole 2 days has been collaboration. You know what? If you want to survive, this is something that you really need to look at, and I think the group has to sort of just continue the communication within all of their networks to get that. Outside of that, I'm open for any other suggestions.
And just to add, Bob, we've relied on certainly during we started fulfilling in January 2020, and then the pandemic hit. We relied on monthly direct outreach to CEOs. I'm sure most of you have heard from myself or others about our capabilities. As the world has opened up, you'll see us at the association's convention in October. We're going to continue other outreach efforts to get the word out. But we also offer I think a more flexible solution than some of our competitors out there, which is more of a outsource it all to us, and we'll take care of it. If you're not doing mortgages now, we can take that on right now. We find a lot of credit unions that have built out a lot of the infrastructure and they want to expand the front end just to counter or just to reflect both on what Jeff Smith and Mike Murphy said. You can save your dollars on fixed costs and then use the savings to increase your sales staff. So, that's our message to a lot of credit unions. We also do some just contract out underwriting to some smaller credit unions that retain most of their mortgages, but every now and then they want to sell that loan to the Federal Home Loan Bank or whatever. So we're able to provide that as well. So again, it's mostly outreach. We're going to try and ramp up some of our marketing communications, but we think we have got a great message. We've gotten a lot of our referrals from within the industry, from vendors. I know Jeff gets a lot of referrals from mortgage insurers when they another credit union union who's struggling and they say, you ought to check out this. So that's kind of.
Yeah, I mean, just to follow up on that, if we're not getting the traction within Massachusetts, which is what we want, the board has approved us to provide outside of Massachusetts, QSO fulfillment. So, we're talking to, we actually have one credit union out of Middletown, Connecticut, that's using us for some business. We actually have a bank that's an organization in Connecticut that, as long as we don't do more than 49% with a bank, that we can provide. And so we're going to find other ways to keep us growing and busy. We just think that if it's not done by the team in Massachusetts that's our investors and that are here, we think it's a little short-sighted. But obviously, I'm very biased on that, and we hope that the message gets out. But we're gonna let our team survive with helping other places out if we have to go outside Massachusetts.
I will say, if I could jump in here, because we are running a little late. If you haven't looked at their annual report, please do, because it's really quite impressive. I mean, they've built, and the 27 institutions that MSIC who sponsored this built a world-class organization, I don't know, in the midst of a global pandemic. But other than that, I mean, that was the warm-up act. They've increased their productivity, their revenue. I mean, things are really, I think they're on the up and up. And the other thing I would say, Bob, is good times cover a lot of ills. And now we're getting into a more challenging time where hopefully more of our members will take a hard look at what they're doing and is it working and is it cost effective? And as they begin to understand the true nature of the mortgage business, I think more and more of them are going to see that this new model allows people to increase their revenue and do this in a right way, in a world-class way, and really deliver products. So I'm cautiously optimistic for the next few years. How's that? Great. Any other questions? Thank you all. I hope you enjoyed this. We're going to.
Hello, everyone. So we hope you all enjoyed that video presentation, and we can get right into the Q&A. For those, I do have some questions that have come in, but for those who want to ask any questions, you can use the Q&A or the chat box that you'll find at the lower right-hand corner of your screen, and then I'll just ask them in the order they are received. I'm not sure who would take, maybe Jeff, this question would be best for you. How long does the onboarding process take for a credit union?
Yeah, it's usually 30 to 60 days. Why the range of 30 to 60 is we have what we call a pre-onboarding checklist, has about 15 items on it. We give it to you, and it's how quickly you get those items back to us. Once you get those items back to us, then we have to build out Encompass, making it private label for you. So it's your fees, your settlement service providers, your appraisers, your attorneys, all that sort of thing. And then once we have it all built out, then we do some testing and show you the testing. Does the LE print out like you want the LE to print out? Is it saying, are the fees correct? Are they on the lines that you wanted them on? All that sort of thing. And then we do a testing of a closing package, a CD. And once you have signed off on both the tests for the LE and the CD, then we're ready to sort of go live. Now, if your group is not on Encompass right now, we do give you free seats to Encompass, and we actually have a training manual that we would give you, and then we have someone that would work with you to train on what you need to do in order to get up to speed on Encompass.
Thank you. Yes, someone asked for contact information for Chris. I'm happy to provide anyone with any of contact information following the close of this. I'll get in touch with you and I'll send you that information. No problem at all. Another question. Why is a product and pricing engine important?
I'll take that. We have a contract with Optimal Blue, and they are a product and pricing engine. So what happens is that in today's world, many lenders, not all, many lenders add what they call risk-based pricing adjusters, so that if someone has a credit score of 600, they don't get the same rate as someone who has a credit score of 800. If someone's putting down 40%, they get a better rate than somebody's putting down 5%. So these risk-based pricing adjusters are provided by the two standard agencies, Fannie and Freddie. And rather than have you try to calculate those manually, the product and pricing engine builds that in. And every product that is listed, whether it's a 30-year fixed, 5/1 ARM, 15-year fixed, it does an automated calculation so that you know the price is accurate based on the actual parameters of that borrower. So all their information is in, you know it, and it will come back with a price that is designed and tailored just for that applicant. So it speeds up the process, also improves your online experience for somebody who's trying to apply online, and they get to see a price that's appropriate rather than just saying, you know, our rate is 5.5, assuming that your credit score is over 720 and you put down 20%. This makes it just much more fine-tuned.
Does the size of the credit union matter as far as volume? Does Partners have a minimum mortgage volume for service?
Laura, you want to take that?
Yeah, I can speak to that. No, there's no minimum size. There's months that we've done, 3 loans. There's months that we've had none. And that's what makes Partners such a great model for us, because we are saving the cost of not having a fixed cost salary that we have to pay every month. Last year in 2021, we were looking at having to kind of ramp up our model. We didn't have to do that with Partners because we were able to use their staff. And then in 2022 as well, where we would be looking at having to downsize operations, we didn't have to experience that because we weren't paying a salary. We were only paying that variable cost as we close each loan. So it's a great model for small credit unions, especially where you're only paying as you're closing loans.
So Laura, while we have you, and kind of piggybacking on Jeff Smith, who was speaking from the perspective of someone using MSIC Partners, what was the transition like in the beginning for you to use Partners? How steep was the learning curve for you and your staff? What did you find in signing up?
Perfect. Yeah, and sorry, I think I just lost my video here for a second.
That's okay. We can still hear you though. We can hear you, no problem.
So as Jeff said, the time frame was exactly as he described. If anything, if there was a lag, it was really on our end gathering all of the information, but they made it very easy to get us on board. We did not come from using the Encompass system before, so there was a learning curve for us, but the Encompass system is very robust. It does everything you could want it to do and more. There's lots of automation that we could put in place with forms and different processes. It's really a great system. And for us, it was leaps and bounds ahead of what we were using. The fact that Partners pays for that seat, we were able to eliminate license fees that we had been paying for. And with that, we gained a better system that was fully electronic. We have no longer using any paper. And it allowed us to have an online portal where our members could do everything online, from e-consenting to uploading documents. And it's been a wonderful experience for those borrowers that really want to do absolutely everything from the comfort of their home.
So I think Jeff, Laura just spoke to this, but the question is, do you have to be paperless now to work with MSIC Partners?
And I can take that. I was going to say I can take that because we were so deep into paper. And, Jeff and I had lots of conversations where, oh, geez, I don't know if we're ready. And we just decided that the technology's there, let's do it and embrace it. And Partners walked us through the process, and it's been fantastic.
Yeah, so to follow up on Laura, no, her organization's a perfect example of they were 100% paper, and they've been always looking for a sort of a foot in the door to start down the paperless process. And when we came along, that was the foot in the door. So now their mortgage side is all paperless. I'm guessing they still have a ways to go with the rest of the organization, but at least they started. So you do not have to be paperless now. We will make you paperless on the mortgage side, and you know, at some point in time, you'll come back and thank us for doing that. Would you agree, Laura?
Absolutely. It's been such an easy process.
Great. Well, we don't have any further questions in, and I just wanted to say to Mike, Jeff, and Laura, if there's anything else you'd like to share or say, this would be a great time to do it. Otherwise, we can conclude the presentation. But please, whatever, you know, this is a great time to take the opportunity to address the attendees.
I'd just like to add one thing. Our first reason for picking the CUSO was to really lift the back office burden for us, and that was our main reason for looking at it. But we were really, as we began our partnership, we realized that there was so much more additional value that they brought, especially for us as a small credit union. They provide everything that Jeff said during the presentation is true. They really make us be better lenders with their knowledge and expertise. And with the Encompass system and everything being electronic, they've helped us speed up our closing time frames. Whereas we really thought we had great service, we did, but we didn't have a great product and a great process. And having this technology in place has really made us improve our whole process for mortgages. And they've been a great resource for us to work with, from compliance to underwriting. If we have some new staff, so if there's any underwriting questions, they're a great resource to go back to. And even just with assistance with new products, because there's a tremendous amount of depth and expertise within their organization.
Hey, and Erica, I'd just like to add, as we finish up, that you know, the variable cost model is so important. You know, due to the extreme variability that is the very essence of mortgage lending, every credit union is limited to the investment that they can prudently make in their production function. This results in some measure of excess capacity when rates move higher and bonds drop like we have today. And that's certainly a drag on the credit union's earnings. But even more troubling is the extreme shortfall in capacity that happens when rates move lower, similar to what happened in early 2021. Invariably, you have a lot more demand than you can meet. You end up disappointing members. And that's, you know, that's troubling because of the long-term implications it has on the credit union's reputation. But with the CUSO, you solve that problem.
Thanks, Mike. Thank you very much. Let me just see. Yeah, I think at this point we can wrap that up. That concludes today's presentation. I want to again thank Mike, Laura, and Jeff for being here today and for your time and your insights. And for everyone who attended, thank you. I saw that there was some interest in getting in touch with Chris Brennan and Jeff, so I will be in touch with that information directly, no problem. And if anyone has any questions or anything, of course, always reach out to me. Everyone in attendance today is going to be emailed a copy of the presentation, and the recording that you saw today will be on our YouTube channel and our website, and I will let everyone know once that is available. And then lastly, just mark your calendars for our next webinar, which is on Wednesday, September 28th. It is going to be the economic update that was given by Dr. Michael Goodman at the summit. And then Dr. Goodman will join us for a live question and answer period. And then on October 19th, which is also a Wednesday, we're going to hear the presentation from Dr. Rick Mitchell that was recorded at the summit. And that was an update about the COVID-19 pandemic, the continual vaccine rollout, and what's ahead. And again, Dr. Mitchell will then join us to answer questions. So stay tuned for more details about those webinars. You'll see them in your inboxes soon. And then other than that, thank you and have a good rest of your day and enjoy what's left of summer. Thanks, everyone.
Thanks,
everybody.
Take care, everyone.
Bye-bye.